Most insurance mistakes aren't discovered when you buy the policy.
They're discovered when your claim's denied.
And by that point, it's really not about saving money anymore.
It's about damage that can't be undone, coverage that can't be added, and gaps you didn't even know existed.
Today, we're pulling back the curtain on what insurance should look like proactively rather than reactively.
We'll talk about where people focus too much on price, where they're often over or underinsured,
and how insurance actually fits into financial planning.
Joining us today is Wade McClain with Farmers Insurance in Beaumont, Texas. You walk through with a lot of people and business owners all the time about things that they probably should have thought of or should have done, right? And so really what we're wanting to talk about today is big picture stuff. There's a lot of people out there that think that insurance agents are more reactive than proactive, right? And maybe some for good reason. But I mean, what do you think about that?
My thought is that a lot of insurance agents are, for lack of a better description, they're basically salespeople. They're not really consultants. It's their career. And yes, that's their job. They get paid a commission. But I think a lot of the focus by a lot of them that I've seen and run across, that it's a sales transaction and they make money off of it. After that, they kind of move on to the next sales generator, next income generator, but they're not really there to service the client after the fact. It's really transactional and it's upfront and then they move on.
Yeah. And we've noticed that a lot too in the financial advisory realm as well. There's, some advisors that they kind of do what they need to do in the moment, but then they don't really follow up or change when the dynamics of the family or anything like that change for the client.
Yeah.
So
when you talk about any kind of relationship like that, might be, an insurance agent, might be an advisor, financial planner. We were kind of framing it in our thinking of you have those who they're proactive over here and then they're reactive over here. But there's a more full rounded perspective that does include, you don't have to be proactive. You don't have to be reactive. You could just be transactional, which let's do business and then we're done. Kind of a set it and forget it. Come get something from me, buy this widget, buy this service, and then that's it. And there's not a relational aspect to it. I think that in order to be proactive or even reactive, you do have to have that element of being relational, knowing somebody. Proactive, you have to know them. You have to know where they're going, what they need, and then you provide that service for them. And then if it's relational, then you can also be reactive on the other side and help them once an issue comes up, once there needs to be a change to a plan, something like that. So you do have these two overarching umbrellas of, is this transactional? Is this relational?
To your point, you can be proactive and then you're going to react when you stumble across new information. But I think where the problem comes into play is when you've got a purely reactional type agent. They're not looking, they're not searching, they're not updating, they're not staying on top of that relation with the client. And they're simply reacting when the client calls in, but they're not asking. They're not actively going out and keeping up with the customer's life because as we all know, life changes.
Yeah.
That's right.
So why do you think a lot of those relationships end up like a set it and forget it?
You got to go look at the heart of the individual that's on that sales transaction. It's sad, but today I think a lot of companies talk about customer service. Very few deliver customer service. Individuals may have a business to make an income, make a living, and that's great. But is the heart based on service, or is the heart based on I want to make $1 out of this client and then move on to the next client, make another $1? That's not a relationship. That's that going back to that transactional.
Right. Actually caring about the people that you serve, not
Absolutely.
just looking at them as a number.
Absolutely.
Maybe kind of fill that out a little bit more. What exactly would you describe as this is the behavior that a proactive insurance agent engages in?
That's a great question. One of the things that I had done kind of in a research, my own individual research before going to insurance, I grabbed everybody I could that would give me the time of day and said, when's the last time you talked to an insurance agent? I was horrified to learn that the average person I talked to had not spoken to their agency or their agent in 5 to 7 years.
Oh, wow.
Some of them had said 10, 15 years. They said, last time I called, is when, or talk to my agent, is when I originate the policy. I've talked to their staff a couple of times as I've changed cars out. Other than that, there'd been no interaction at all. And I came from a banking environment where it was high touch, high relationship. In the terms of proactive, it's more, do you know what's going on in your customer's life? Are you waiting on the phone call for them to call you and tell you? Or are you actually making that phone call? Are you scheduling appointments? Are you giving them an opportunity to sit down, meet, have coffee, and learn about them and what's going on in their life? What's changed since the last time that you actually met with them? Tell me what's going on, what's new. And once you ask that question from a proactive standpoint, you can learn all kind of information. Then you may be able to see there's a problem that we need to cover or make a change on an existing relationship.
So, in your opinion or professional experience, how often should a policy be reviewed, and then why?
It's a great question. I mean, you got different policies every 12 to 18 months, though, because values of vehicles are changing. Life changes. I've met with clients before and sit there and meet with a client and say, well, when's the last time you talked to the agent? And they say, well, I've talked to him 10 years ago. I'll say, and what's changed in life in the last 10 years? And they've got 3 girls. And he's not adjusted his life insurance at all.
What are some key life changes that might trigger a need to have a conversation?
The major components that we're looking for is death of a family member, of a spouse. That can change life insurance. That can change what you're doing with your vehicles. What do you have coverage-wise on your vehicles? Marriage, birth of a child, moving, major renovations on a home, because that could change. You know, a lot of people do renovations, add on to their home, or they close in a garage. If the agent doesn't know about it and doesn't ask, they may be underinsured. And if there's a loss, then they're on the hook financially.
So insurance is not just a one-time transaction.
Absolutely
It's an
not.
ongoing risk management process.
So many claims aren't freak accidents. Most of them are actually predictable. So let's walk through some seasons, the different seasons of the year. In the springtime, what are some issues that you see that present themselves during that time of the year?
Sure. So typically when you're talking about seasonality of insurance, normally that's going to be more along the lines of, say, your house coverage. So for example, springtime, you're going to be thinking about things like checking to make sure your gutters are cleared. During the fall, winter, your leaves are falling. They typically clog up gutters. You don't want that water stuck up on your roof and then overflows and gets in areas that it's not supposed to be in. You want to make sure tree limbs are cut back and trimmed back so they're not rubbing the asphalt shingles, which could actually cut through them. You move into summer, you want to make sure, again, water flow, a lot of hedges, your yard trimming back and everything. You get into winter months, normally it's going to talk about freezes. You're going to be looking at pipes. Construction has changed over the years. A lot of pipes, a lot of our water lines are actually in the roofs. They're in the attic spaces above our homes now. Think about how many times you go in your attic. Not very often. And
I don't know if you're me.
Sometimes. As little as possible.
Most people don't want to go up there in the wintertime. However, you want to make sure those pipes running back and forth, you want to make sure all that's insulated. You have bibs on your faucets and that sort of thing. But a lot of the pipes inside the home are where you run into problems during the wintertime. And so the preparation is, and you can use things as simple as the gray foam that you can get at any hardware store. Pool noodles work great. They're colorful, but who goes in your attic?
Right. So, and you and I've had this conversation before, but what about like extreme drought periods or something like that? Like you start possibly having some foundation issues?
Here in Southeast Texas, we have a tremendous clay content in our soil. And what that means is in times of drought, you're going to have tremendous ground contraction where literally the ground can crack. I've seen it so bad in yards before that mower tires were falling into the cracks and scalping the grass, which made it even worse. But in times of that, what we normally recommend is your ground is moving, and so you want to try to prevent that as much as possible in relation to the foundation. So typically what you would want to do, if you do have an extended period of drought, lay a soaker hole around the outside edge of your foundation and just run that on a timer every other day and just water that ground around it. That way the ground immediately around your slab is not contracting and pulling back.
You know, Wade, one of the businesses that I run is I'm a realtor, and I cannot tell you how many of these homes I'll take a client to go and look at, and it is very evident there are foundation problems, and those problems have been unaddressed for years. And I don't know that some people necessarily realize, one, we live in a swampy area here in Southeast
gumbo.
Texas. That's right. And so things are moving. And so one, you have to be aware to look for it, looking for cracks in the sheetrock, cracks in the trim, doors not closing properly. Like that's indicative of maybe a bigger issue. And then the second part is, man, don't let it go.
Right.
Don't let it go, because I see it on the transactional deals in real estate. When it comes to negotiating, you're talking about a seller having to make a concession of, I don't know, sometimes $10,000 to $30,000 because they're having to get foundation repairs, sheetrock repairs, all these sorts of things. So being preventative, man, it's going to save you money, not just on the insurance side. It's going to save you money when you start to get ready to sell your property, things like that, if you're proactive about it.
To your point, when you have those things, foundation problems never fix themselves.
That's right.
It only gets worse. It doesn't get better until there's remediation. So to your point, one, it can cause a lot of problems, but it can also lead unabated. It is going to cause additional problems where you may even get so bad that you break a water line.
Right.
Now you've got a water loss in addition to the foundation problem because there's continued separation.
So Wade, if there's just one thing that you could prioritize each season, what would that be?
So I think in the springtime, what I would focus on again is checking the branches, making sure gutters are clear, and branches and trees are kind of trimmed back. That way you want to move water away from you and prevent any damage occurring from those tree limbs, rubbing up against the home and tearing up your roof. That roof is so important because it protects everything underneath it. And so that roof is critical. If you've got something called nail pops, those are simple. You can get a roofer out there and just tap them down. But your shingles, if they start uplifting, you get a strong wind event, it can peel it back just like a tin can and it can roll that roof off. You start getting to summer, we're talking about here in this area of Southeast Texas, we're talking about hurricanes. While we all enjoy the shade, you want to make sure that the limbs are trimmed back. If you've got any dead or dying limbs, you want to get those out before a windstorm event comes in because those could puncture your roof and create bigger problems. And again, as we move into the fall, as we move into the winter months, it's about insulation. It's about potential water loss from frozen pipes. We do get that even down here on the Gulf Coast. We get that. Obviously we just had a big event, but they can happen anytime.
It's going to be cold this weekend too.
Yes, 22 degrees is the low. So bundle up. But in the wintertime, you want to insulate those pipes because if you have a water loss, the problem is you don't know it's frozen and busted until it thaws out.
That's right.
And all of a sudden you've got water spraying everywhere, or you get an interior swimming pool that you didn't have an indoor swimming pool before.
A lot cheaper to build them that way though.
Yeah.
So I think we could say most insurance issues are really maintenance issues.
A lot are, yes.
Yep.
And so cheap insurance is often expensive insurance. When people shop insurance just on price alone, what often are they giving up?
I'm going to go back to that reactive agent who is just in it for sales, just in it for commission. They know the client is an expert on one thing: money, cost. And so insurance agents oftentimes will go sell the cheapest policy that's out there. The problem is on the backside is about claims. We make subconscious decisions in our purchases every day. The car you drive, you could get a Kia, and that's a lot cheaper. So if you only make that decision based on cost, we should all be driving Kias. Nobody should drive a pickup truck,
Right.
or SUV or Cadillac or anything else.
Or have like the blind side detectors.
Oh,
and,
absolutely.
you know,
roll up your own windows.
the cameras on them. Yeah.
If price was the only purchasing decision that we made, then Cadillac, Lexus would never sell a car, but they do. Why? Because people give value for their money. So what I challenge people to do is, to your question, is use the same approach that you're already doing in other expenses in your life, like where you eat and what kind of car you drive. You apply that same logic and that same process for value for your money to the insurance policy. I had a neighbor in my subdivision. I actually quoted this individual. My policy was $300 more than what she was paying her current provider. So she chose to stay where she was. We had a hail event. I paid for a brand new roof that was very expensive, about $24,000 it cost me to change my roof out. Out of my pocket was $3,500. Out of her pocket, her roof was around $18,500. The differences in the policies, She paid about $14,000 out of her pocket more than what I paid out of mine, and she got a cheaper roof. $14,000, and the difference in the policies was $300 a month. She would have had to go on 47 years with no claim to get that money back.
Yeah.
Make sure that you're getting value for your money, not just getting the cheapest thing out.
Well, and that's the math that just a lot of people just don't know to run.
Right.
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 You know, you made the comment, most people, they're experts in money. In fact, almost all people probably think they're experts in money. But we've been talking recently about opportunity cost. And if I put my money over here in this policy, what am I giving up for that? Well, I'm giving up this policy over here. Well, there are differences. Now, if I take a holistic picture of my finances and my financial welfare and well-being, she might feel a benefit to herself in 1 year if there's no accident. But when that one accident comes, it's a 47-year problem. Are we really doing the full calculation?
Right.
I can tell you that most of the time they're not, because it comes down to coverages and a lot of things inside the policy that the client is not aware of. The state only mandates in Texas certain of the major components and coverages be disclosed on a quote sheet. And so the problem is, beyond that, there's a lot to the policy, but the customer doesn't know the differences. And so oftentimes I've asked clients, when your agent moved you from X and Y to over here, this other policy, it's cheaper. And everybody associates cheaper with better because they know the money side. What I ask them is, did they tell you what coverages you were giving up in order to get that cheaper policy? And oftentimes that answer is no. They didn't tell me anything about the coverage changes. I'm like, well, I guarantee you there's some coverage changes from one company to the next. I don't care who they are.
So when we talk about coverages, different coverages like that, like I said, most people don't really understand their money. I think most people would agree on this. Most of us don't understand coverages.
Right.
In your expertise, what are the most misunderstood coverages?
I think some of the most common things is not understanding some of the differences and nuances. So unless you really are an agent, you may not know, or if you don't ask the right question. But replacement cost versus actual cash value. That's what got my neighbor. Her roof was only covered at actual cash value. My roof was covered at replacement cost. After I satisfied my deductible, the rest of the cost of my whole new roof was covered. Hers was depreciated, and so she only received $4,400 from her claim, whereas I had a $24,000 roof put on, and it cost me $3,500 in a deductible. From one policy to the next, some things just aren't flat out going to be covered. And then understanding that there are sublimits, and this is a big one. Policies out there have a sublimit on water losses, and a lot of times you have your deductible that you absorb as a client, then the policy kicks in and it pays up to the sublimit, which it may be $5,000, $7,500 on a water loss. Water losses typically run $20,000, $25,000.
So sublimit, we're just talking about basically the cap at which the policy is going to pay?
Correct. So your deductible, if it's a covered event, then your deductible kicks in. That's on the shoulders of the insured. And then the policy kicks in and pays up to that sublimit amount. But then the policy, after it hits that amount, it's out again. And then the rest of that is out of the pocket of the insured. The insured can end up actually paying more for a repair than the actual insurance carrier.
And that brings up kind of the next section we're going to talk about, which is what is something that people think's normally covered in a policy that aren't?
Great question. I would tell you the two most common around Southeast Texas are they think that the foundations are covered, going back to our conversation about slabs. Earth movement, it's typically excluded from any homeowner's policy. Another common one around here is, unfortunately, termites. Termites, and, infestation of termites and all that, they can get in, they can do a lot of damage if you don't catch them. And those pests are not often covered.
So let's talk about the flip side of things a little bit. More insurance isn't always better. So do you think it's possible for people to be overinsured?
Based on the certain circumstances, there are some common things where we see people overinsured is in their automobile policies. Your automobile is depreciating in value, and there's a component of your automobile insurance called uninsured motorist property damage. That piece of coverage never needs to be more than the most expensive car in your policy. If you're driving some cars that are 2009, 2012, and say they're a small car, maybe a compact car, and it's valued at maybe $25,000, you don't need $100,000 worth of uninsured motorist property damage. But I oftentimes, when I review a customer's policy that they bring me to review, I often see that they have actually, the agent has set their coverages up to where it's a certain level equal to their liability. To me, that's just a waste.
And maybe that coverage could be reallocated somewhere else that could be utilized in the policy. Right.
Absolutely. The common things, if you've got a man and wife, a retired couple, and let's just say they're more homebodies, do you really need rental car reimbursement? If you can get by with one car, because they really don't do a whole lot in retirement, you probably don't need rental car coverage. Now, I've seen retired couples, they are running the roads. They're probably busier in retired life than what they were in their working life. Then maybe that would make sense to have it. Personal injury protection, PIP, versus medical. Well, PIP coverage covers medical, but it also covers lost wages. Well, if you're retired, if you get injured, you're not going to have any lost wages. Your retirement money will still be there.
They're not going to fill back up your 401k.
No, there's we wish. It'd be a lot more expensive if it did that. But yes, so you're not going to lose any money, any income if you were to be injured. So you don't need personal injury protection. You just need medical once you're retired.
Okay, being self-insured. And I think this is a question for both of you because it does come into financial planning. We deal with long-term care insurance. We deal with insurance policies and things like that because it's part of a holistic financial plan. When does it make sense for somebody to be self-insured? And how does all that work together from the insurance aspect side of it, even from the financial planning side of it?
So I'll address it from an insurance perspective. Now, you could either say no insurance at all, or I like to look at it as down throttling your insurance coverage more. So for example, once a value of a car drops down to a certain point, you don't need full coverage insurance. So if you've got a small sedan and it's an older vehicle, if it's 12, 14 years old, you're probably going to get $750, $1,000 if that car gets totaled. So do you really need to pay for full coverage insurance on a vehicle? I would recommend no.
Okay.
But if you're talking about, but somebody's assets are higher. If you hurt somebody, nobody gets in their car in the morning saying, this is the day I'm going to hurt somebody and hit somebody with my car. But if you do, what happens is this: if you don't have enough insurance protection from a liability standpoint to pay the damages that you do to that other person, you're probably going to end up getting sued and get a judgment against you. Your liability insurance is only to pay up to that liability limit, and then the insurance company's out. The rest of it is on your shoulders. If you don't have the right level of liability, and this is scary in Southeast Texas, you're going to get sued, and a judgment is going to be levied against you. Well, you got a police report that says you were guilty, so they get a default judgment. It's very simple, very easy to do. Anything that's non-retirement is susceptible to being taken and cashed in by judicial order, cashed in and given to that other person that you hurt from a liability perspective. Also, that shows on the credit bureau. It's going to hurt your credit. It's going to hurt your scores both today and down the road. Judgments stay on somebody's record for up to 10 years. Then if it's not satisfied, it stays out there. They can do 3 reinscriptions, which is simply a legal word for renew it for another 10 years, and they can do that 3 times. So they can tie somebody up for 40 years with a judgment, and they can take everything other than retirement funds that somebody's accumulated. So investments, savings, checking accounts, all of that can be wiped away.
And I think from a financial planning aspect, that's what I find is most people don't run that kind of math. Meaning, it's quite different when you look at something like an automobile, the likelihood, right, of getting in some type of accident or something going wrong with that vehicle on the road or whatever, it's quite high. I mean, it really is statistically. And then you look at something like long-term care, still quite high that something's going to happen, but probably not as high as something like an automobile. And so going back to this self-insurance type thing, there's a lot of people that we run into when we're doing financial plans. They've got over $1 million. Some of them $2-3 million. And they look at that wealth and they're kind of like, okay, if one of these things happens, I'm good. But we always talk, things typically happen in 2s and 3s, not in one fell swoop. And then, life's going to wait for your wealth to accumulate back up before something else happens. And then you got to, how many people do you have in your house? Like you're just basically amplifying the chances of something happening with somebody, right? I don't personally know anybody that's got the kind of wealth that they can afford to just self-insure everything with life.
Wow.
Right. Well, so from a liability standpoint, and we'll address this a couple different ways. Liability standpoint, an umbrella is cheap. You can get millions of dollars with an umbrella coverage for less than $1,000 a year, around, depending on how many toys you have and how many cars and real estate properties and all that. Liability is the cheapest type of insurance out there, and that is the defensive wall that keeps other people that you've hurt out of your back pocket.
Right. Sometimes having more wealth requires more insurance. It's cheap, y'all. I've got an umbrella policy, right? It's not expensive, but that requires certain other coverages to be beefed up on your other policies to have it. But man, it doesn't cost much more in the grand scheme of things.
Right. And so you also talked about life doesn't happen in spread out events to allow you to reaccumulate wealth if something does happen. Let's talk about Southeast Texas, 2017, Hurricane Harvey. Major national flood event, worst flood event in U.S. history from a tropical storm. 2 years later, Hurricane Imelda. 2017 to 2019, Hurricane Imelda hit. I had individuals whose home flooded in 2017 who were just getting their home put back together in 2019, 2 years later, and they got flooded again. If you're self-insuring, that's major repairs out of your pocket that you're having to fix. And flood claims are expensive.
If someone's close to their policy lapsing, do the agents get notified of that?
Depends on the company, depends on the agent's complexity of their systems. Most companies will give out an email to a pending cancellation, and it's usually about 2 weeks notice before it happens. In the state of Texas, they don't cancel immediately, even for non-payment. They typically have a 15-day window where they send you a notice of pending cancellation, but normally those agents are receiving communication, and we have phone calls, we have emails. We'll try to reach out in every certain way. We'll send letters if we don't get any return of contact.
But that goes back to that whole proactive thing. Do you really care about what you're doing for people or not? Because maybe that email comes across somebody's desk. I'm not saying this happened, but I'm saying maybe that email comes across and they're like, man, I've got too many of these right now.
You don't want to get there. Talk to your insurance agent. Make sure that agent's proactive. Make sure they know your situation and that you stay on top of it.
I will tell you this, that's another big thing. Are they present? Do they return your call? Unfortunately, I know of a lot of agents. I'm in the industry, so I know a lot of people that are in my industry, and a lot of them are not in their office. And I've had clients say over and over and over again, I like the fact that when I call, you're there. It's like, I'm actually at my office probably more than I'm at my home during waking hours.
Good insurance is going to start with good questions. So we want to talk a little bit about your process. When you meet with a new client, where do you start?
So I'm going to phrase this in context for two different policy types, the two most common, auto and home. So from an automobile standpoint, typically what we're going to do, we're going to sit down, and if they're willing to share it, we're going to look at their current declaration page on their automobile policy, where they currently have, because most clients don't even know where are we at today. Then what we're going to do is simply do a comparison, say, okay, where are they at versus what we recommend. Our recommendations are based on statistics. Locally, you hit two other cars, engage two other vehicles, and you're at fault, you better have the right amount of property damage, because if you don't, you're probably there's a high risk of being sued.
And here we are in Southeast Texas, where a lot of those vehicles are trucks.
Right. SUVs, big vehicles.
And those trucks are way more expensive
I
than
was
the
talking
average.
to a man just the other day, and he had a 2014 F-150, and he, loves it, but he's kind of in the market searching around. He was looking at an F-250, and he was just dumbfounded that this F-250 he was looking at was $115,000. Vehicles don't cost what they used to cost.
Oh, no, not by a long shot. And homes, too. That's the other piece that we look at is homes, because a lot of times when I sit there and look at somebody's home policy, their point of reference is, what did I pay for that house? It doesn't matter what you paid. At claim time, there's only two numbers that people care about. What does the contractor tell them he's going to charge them to fix it? And how much of that is the insurance policy going to pay for? because you may have bought a home for $75,000, but if the reconstruction cost on that home is $200,000 today, you want to make sure that your contractor's got enough to pay and put your home back together. So, for example, going back to inflation, we talked about the storms. I moved to Texas in 2004, July. Hurricane Rita hit September 2005. The fence company that built my fence on a brand new home cost me $2,500. That fence got blown over during Hurricane Rita. 14 months later, after Hurricane Rita hit, I called the exact same fence company to rebuild the exact same fence. The quote I received, $7,800. So there's temporary influxes in pricing as well, not just the run-of-the-mill. So we talk about reconstruction costs, but then you've got temporary price increases if it's a massive event or a catastrophic event that affects a large area. I'm not interested in duplicating another insurance carrier's gaps in coverage.
So, you know, when somebody comes to an insurance agent, they're looking for a policy. And as an expert in this field, what are the more important questions to ask than just, hey, what policy can I get?
I would ask questions such as, is this a replacement cost contract? If you have an actual cash value policy on a home, you're going to lose money. What that means is at claim time, you're not going to get enough money out of the claim, even if it's accepted and everything's covered. You're not going to receive enough money to actually put your house back together and to fix all the damage.
When you're talking to a client, what role does their lifestyle play into insurance products that they need?
Typically, what you're going to look at lifestyle is what are they involved in and what are their assets? What needs to be protected? Obviously, the lifestyle of a 20-year-old who has no assets, maybe going to college, he's driving a 15, 18-year-old car, a lot different than a lifestyle of somebody who is in their late 50s, mid-late 50s, looking maybe down the road at retirement. What do they need to protect? Those lifestyles are dramatically different. May have a lake house, may have a secondary home, may have other rental properties, toys, as we call them, could be travel trailers, could be boats, the things that they use on the weekends and all that. Those items need to be protected, not only the physical, tangible assets, but then also protecting other people when those bad days happen and damage is inflicted on other people unintentionally. When that happens, the insurance needs to pay the other person that's hurt and injured, but we don't want it to devastate the life of the person who caused the accident. And insurance is what the difference is. You either have it or you don't.
What a great approach. What a great approach to insurance. When somebody comes into your office and they say, what coverage do I need? That's not the right question. The question is, what do you love? What do you have? And what do you need to protect? What I'm understanding is if you can answer those questions, what is it that you are unwilling to lose in your life?
Jordan, that's exactly right. I didn't mean to cut you off.
No.
That's exactly right. So I phrase it like this. The purpose of insurance is not to get you ahead of the game at an event of a loss, but it's to make sure that we are able to restore you to where you were at right before the loss occurred. You don't want to lose ground, but you're also not trying to make, you're not going to go from a regular average home to, okay, I've got the insurance, now I can rebuild the Taj Mahal.
So insurance really, in the financial world, is a hedge.
Right. Yeah. And at the end of the day, what you're trying to do, like Wade was saying, is you're trying to protect what you have. So you're not having to completely start over.
Correct.
Because let's say you did save and you've got a nice portfolio that you can actually get to that's not in a retirement account if you're under 59 and a half, some type of a joint account or individual account, something like this, brokerage. And there's a lot of money in it. Well, you have an event like a hurricane happen, you may or may not have the money in there at that time. And then what are you doing? You're starting over again.
Well, and what's the point that I always hear you make is, a hurricane doesn't care if the stock market is down.
Right.
If you got all your money tied up and in your 401, 403B, and you can't get to it, it's illiquid. Ooh, what's going to happen? Having
a smart place to get money from at the right time. And that's what insurance helps you do.
That's right.
So,
Insurance creates a liquidity that you need to put your life back together.
Yep.
Yeah.
You don't want to have to cash out those accounts. If there's a dip in the market and you're having to sell your securities while they're on sale, you're selling them at a low price.
I know
Gosh,
some people that would buy them.
that's a massive loss. When we're working on financial plans, that's one of the most impactful factors to a person's success in retirement and in their financial life.
Yep.
And that's why I'm against self-insurance in general. It's not because I want to sell another policy. It's because a person can gain those assets. It takes a long time to save and build, but you can lose it in one event. And like you said, depending on your age, you may not even be able to recover from it.
Again, unless you're one of these that have $25 million plus and you're living as the average person would, right? If that's the case, maybe. But do you know anybody like that?
No, I did see in the
Personally?
news today, though, that somebody shrank their assets by $14 billion. They lost $14 billion, and they slipped from number 9 wealthiest in the world to number 14.
Yeah, poor thing.
Sad. Sad.
So how do you get people to understand the trade-offs on the policies without overwhelming them?
So insurance is expensive. Unfortunately, with inflation and everything else, coverages have had to go up. There's ways to manage the cost side of it. I tell everybody my goal is get your coverages correct, then we'll help you manage the cost side of it. And that can be done multiple ways. It can be done with raising those deductibles, which lowers the premium. There's an inverse relationship there. But there's also things like deductible buyback. There's actually secondary policies that you can get. You may save a lot of money by going up to a 5% windstorm deductible, but then having a little policy on the side for just a couple $100 that would basically, if you needed that, you can actually buy that deductible back down so that's still cheaper overall, but your financial exposure has not gone up. And that there's different ways to manage that. Yeah. Or in worst case scenarios, there are certain coverages that you can cut out that may be a pain or a thorn in the side, but they're not financially devastating to the family unit.
I could bring this together in a principle. I would say this. When you're talking to an insurance agent, you're interviewing them. You're interviewing that insurance agent, and you are trying to listen for this. Is that insurance agent talking to you about planning, or are they product pushing? Because a good insurance agent is going to approach it from planning. And then they're going to tailor the product to the plan that you have, what you need.
I could have probably paid you for that solicitation, because one of the things that we've said phrase-wise over the years is we're not just putting together a policy for you. We're putting together a plan.
So insurance doesn't just live in a vacuum all by itself,
Absolutely
right?
not.
So how does insurance, or how should insurance fit within the context of an overall financial plan?
Information is power. I tell people all the time, I'm only as good as the information that you share with me. I don't want to overinsure somebody, and I don't want to underinsure anybody. Again, I want to put them back together.
Funny thing, right? We talk about this with people all the time. I always say, fortunately, having a plan is like the best thing you need to do. Unfortunately, that means you have to show us your underwear. So you need the information, because without it, it might seem minuscule, or I don't understand why they need to know that, or something. But there's a reason. Correct. Because every variable matters.
It does. It does. I tell everybody, look, I know I'm going to ask a lot of questions about you, but I need to know what we need to protect. And if you leave components out, then it's going to be a partial protection. And the time that people find out that there's gaps with their insurance is not when they're paying their premium. It's at claim time. I don't want to sell somebody who only needs a $1 million umbrella a $5 million umbrella, because they're wasting their money. But if they are only insured for $1 million umbrella, but they needed a $5 million, they're going to find out about that at claim time, and then all of a sudden there's tremendous financial harm done.
Right.
So we've talked about how insurance tie into a financial plan. How important is it to be able to work together as financial advisors, insurance providers, insurance agents, CPAs, attorneys? How is it beneficial to have all those people kind of coordinated together and all of those different aspects working together?
It's a great question. So what you don't want is everybody working in a silo. You got a general practitioner, but if you've got a problem that needs a specialist, you need to go to the specialist. But you want your specialist to be talking with that general practitioner, keep him up to speed on what's going on in your life as well. So if a client of mine, if I see and recognize that somebody needs something more complex, I don't have to know every single thing.
That's right.
But I need to have resources and be able to refer people out to those subject matter experts. And there are many times I have to refer somebody to an attorney and say, you need heavy duty estate planning with structuring. You need a trust. I don't do them, but I know people who do, and I'm going to refer them to you. And then they work with me. They come back and say, okay, we've done this for the client, because that comes back and ultimately it impacts their policies.
That's right.
And we may even move policies because the asset may be moved into a trust. Well, then we need to insure the trust, not the individual. So again, we all need to work together for the benefit of the client. If you have any one of those components that's missing, then you've got a gap.
Yeah.
And when you have gaps, that's when financial harm can happen.
Find that, a lot of times you'll have certain professionals, and it's not always financial advisors, not always insurance agents, but people that are stubborn, for lack of a better term, that know it all, whatever, but they don't want to appear to the client as if they don't have all the answers. And I think that pride, probably a better way to put it, that pride seeping in, and I'm the one-stop shop for everything. I don't think that's really what people want. It's definitely not what they need. I think what's better and what's more value-oriented is, like you said, having the resources and saying, look, this is outside of my area of competency. I'm a certified financial planner professional, so our code of ethics says, if this is not my key area of expertise, I should defer that out to someone who knows better for my client, because I've got to do what's in their best
That's
interest.
a moral responsibility.
Correct.
That is a moral responsibility. I'm really curious. You two, you're very successful businessmen. You've been local for a while now. I'm going to ask this question. If it's relational, is there benefit, and I think there is, but could you talk to the benefit of coordinating with other local providers, local CPAs, local attorneys, local insurance agents, so on and so forth? Because if you're going to recommend me to somebody, I need to know, do you know them?
Right.
Do you trust them? How important is it to both of you, Eddie and Wade? How important is it to deal with locals?
Let me start. So, and Wade falls into this category too. So I think he knows maybe what I'm going to say. So how would you get somebody that's not local, right? I go to a lot of conferences nationwide. I meet with a lot of professionals on a lot of different areas of expertise. For me, what comes down to is knowing someone's heart. Do they care? Do they really care? Or are they talking way more about how much money they earn and things like this? Or are they talking about, man, I got to solve this problem for somebody today, right? One of the reasons I asked Wade onto this podcast to begin with was because I know his heart. I know he cares about the people he serves. And in all honesty, he does some of what we do. He doesn't go into depth on he doesn't have financial planning software, things like this, but he does some retirement planning for folks and everything. I'm going to send him to somebody like Wade because I know his heart. Yep. And because I know his heart, I know the same thing. If he gets a client of mine in his office, he's not going to sit there and try to turn them into his client for the purposes that we serve, right? And that comes down to heart. I'll let Wade kind of
the heart thing is spot on, Eddie. I know we're cut from the same cloth. Get to know the person and be accessible. What I do in my job is educate. I'm educating people. It's not about a transaction. For example, somebody gets hit by somebody that's insured by another company outside of our company. I'm going to file their claim for them. We deal with claims all the time. The driver of the vehicle does not. We're going to reach out and file that claim for them. I've been called on Christmas Day before when a tree limb went through one of my clients' homes. It was 2:00 in the afternoon on a Christmas Day, and he's apologizing. I'm so sorry.
But that's not what they're getting from other professionals a lot of times.
Most
they're
times
not used to that.
Correct.
And so whenever you show them that care, and that just speaks to the relational side of the business a little bit more. So,
and it's important. I mean, that whole relationship is where it starts.
We've talked about the heart. All three of us are very similar in our spiritual beliefs. It is my fear of God. It is my love for Christ that compels me to treat people the right way.
Absolutely.
And I believe this. I believe this. If I will honor the Lord in the way that I care for other people, I don't have to worry about pushing products and making sales and getting clients. No. You know what? God's going to bless how God sees fit. And here's the reality. When you're not pushy and you just love people and you just help them solve the problems that they have as best you can, you know what? They're pleased to do business with you. You know, it makes life more pleasant. It makes business more pleasant. I think it helps people. I think people see the genuineness of that.
That's exactly why we talk about coordination over just
Yes.
product pushing.
When you've got a team of people whose hearts are really focused on the individual and not anything else, then the rest of it takes care of itself, and you've got a comprehensive package.
Yep.
So Wade, as we're kind of wrapping things up, if there's one item from our conversation that you say, man, I really wish people walk away with at least this, what would that be?
For me is understand the difference between a salesperson and somebody who's more of a consultant. Apply the value for your money that you make decisions on subconsciously all the time, not just base everything that they say recommendation-wise based on price, that they explain the value that comes along with whatever they're doing for you, no matter what it is. And it may not be as cheap as something else, but it's at the end of the day, you win in the long run because that person's looking down the road at your potential pitfalls. So make sure you're getting value for your money. Cheap is not always good.
Insurance isn't about fear.
It's about preparation.
And preparation only works when professionals work together.
We have additional episodes in our content that cover several areas of your financial life.
Want to get smarter about growing your wealth?
Check out our additional content.